If you're holding gold or silver right now, sit down, because what happened in the last 72 hours is the kind of thing that doesn't come around often. Two massive events hit the markets back to back, and both of them point in the same direction for precious metals. The first is a constitutional crisis over tariffs that escalated faster than anyone expected. The second is a 10-day ultimatum to Iran that could end in a deal or a war. Either way, gold and silver are sitting in the middle of a perfect storm. And just before I started recording this, a Bloomberg headline dropped that made me stop everything. It says, "The US has accepted Iran's demand to maintain uranium enrichment." Sounds like a peace deal is around the corner, right? Gold should dip, right? Well, I read the fine print, and what I found tells a very different story, because their only source is ESNA, the Iranian Students' News Agency. That's semi-official Iranian state media. Not a US official, not the White House, not the State Department. An unnamed Iranian diplomat quoted by Iranian media, and Bloomberg ran it as a headline designed to move markets. I'm going to break down exactly why I think this headline was published at this exact moment, who benefits from it, and what it actually means for gold and silver. But first, let me walk you through the two massive events that set the stage, because without understanding those, the Bloomberg story doesn't make sense. And by the end of this video, you're going to understand exactly what happened, why it matters, and what I think comes next. Let me start with the tariffs, because what just happened has never happened before in American history. The Supreme Court of the United States just ruled 6-3 that President Trump's sweeping tariffs were illegal. Let me say that again. The highest court in the country looked at the tariffs that have been reshaping global trade for over a year and said, no, you don't have the authority to do this. The International Emergency Economic Powers Act, which Trump used to justify almost all of his tariff program, does not give the president the power to impose import taxes. 6 justices agreed, 3 dissented. It's done. Now, you'd think that would be the end of the story. Supreme Court says your tariffs are illegal, you take them down, you move on. But that's not what happened. Not even close. Within hours of the ruling, Trump held a press conference where he called the decision deeply disappointing. He said he was ashamed of the justices who voted against him, including 2 that he personally nominated. And then he did something that caught everyone off guard. He signed an executive order imposing a brand new 10% global tariff. Not under IEPA this time, under a completely different law, Section 122 of the Trade Act of 1974. And here's the thing about Section 122 that most people missed. This law has never been used before, not by any president in the 52 years since it was written. It was designed for short-term balance of payments emergencies. It allows a maximum tariff of 15%, and it only lasts 150 days before Congress has to approve an extension. So Trump signed a 10% tariff on Friday night. Then on Saturday morning, he posted on social media that he was raising it to 15% effective immediately, the maximum allowed under the law. In less than 24 hours, he went from losing in the Supreme Court to maxing out a backup law that nobody had ever used before. Welcome to the hidden economy. If you are new to the channel, subscribe. I'm breaking down events like this every single day and showing you exactly what they mean for gold, silver, and your money. If you can click the hype button, it would really help the channel. And trust me, you don't want to miss what I'm about to explain next. Now let me tell you what this means and why I think it changes the game for gold and silver. The first thing you need to understand is that the tariffs themselves didn't go away. They just changed form. Before the ruling, the effective tariff rate on imports was around 16%, the highest since 1936. After the ruling and Trump's response, the rate dropped to around 7 to 10% depending on the country. But it's still historically elevated, and for some countries, it's actually worse now than before. China, for example, had tariffs of about 45% under the old system. After the Supreme Court ruling knocked out the EA portion, they dropped to 35% under the new Section 122 plus existing duties. That's still massive. And the European Union, which had negotiated a 15% rate earlier in the year, is now sitting at the same 15% under the new blanket tariff. So for many of the world's largest economies, not much actually changed on the ground. And that surprised me, honestly. I expected the Supreme Court ruling to be a bigger deal on the ground, but Trump moved so fast that the practical impact was smaller than the headline suggested. The legal framework changed. The actual tariff rates barely budged. The second thing is the refund situation. Because the court ruled the EPA tariffs were illegal, importers who paid those tariffs in 2025 and 2026 may be entitled to refunds. And the estimates are staggering. We're talking about $175 billion in potential refunds. That money would need to come from somewhere, and that somewhere is the U.S. Treasury, which is already running a deficit of over $2 trillion a year. I want you to think about that for a second. The government might owe $175 billion in tariff refunds while simultaneously adding $2 trillion a year to the national debt. That's the kind of fiscal math that makes gold very happy. But the bigger picture is what really matters for gold and silver holders. And the bigger picture is this: uncertainty is not going away, it's getting worse. Before the Supreme Court ruling, there was one tariff regime. It was high, but it was predictable. Companies knew what they were dealing with. Now there's a 150-day clock ticking on the new tariffs. Nobody knows if Congress will extend them. Nobody knows if the courts will strike down Section 122 the same way they struck down EPA. Nobody knows what Trump will do when the 150 days expire. Will he let them lapse, restart them under a different emergency declaration, push Congress for permanent legislation? This is the part that I think most analysts are underplaying. The Supreme Court didn't end the tariff war. It made it messier. It turned a single policy into a rolling series of legal battles, political negotiations, and expiration deadlines. And every single one of those creates uncertainty. Every single one of those is bullish for gold. Every single one of those drives people towards safe haven assets. Think about what the next 6 months look like from the perspective of a global manufacturer or central bank reserve manager. You have no idea what U.S. trade policy is going to be 5 months from now. You have no idea if your country's tariff rate is going to stay at 15%, drop to 0, or jump to something higher under a different legal authority. You can't plan. You can't hedge. You can't budget with any confidence. What do? You buy gold because gold doesn't have a tariff policy. Gold doesn't expire in 150 days. Gold doesn't need congressional approval to hold its value. And that's exactly what central banks have been doing. Record gold purchases for 3 years straight, over 2,500 tons a year. That buying hasn't slowed down. If anything, what happened this week gives them more reason to accelerate because the message from the court's decision is clear. Even the most powerful country on earth can't guarantee that its own trade policy will survive a legal challenge. That's not confidence building. That's the opposite. And I'm not just saying that as theory. Look at what gold did the day of the ruling. It was already above 5,000. It pushed higher. Not because tariffs were removed, but because the situation got more complicated, not less. The market looked at the ruling and the immediate Trump response and said, okay, this is not a resolution. This is an escalation. And gold responds to escalation. Silver is in the same boat, but with an extra layer. Silver is both a safe haven metal and an industrial metal. The tariff chaos affects silver in both directions. On the safe haven side, uncertainty pushes money toward precious metals. On the industrial side, tariffs on imported goods, including metals and electronics, affect the cost structure of industries that use silver. Solar panels, electric vehicles, medical equipment, missiles. Every single one of these industries is dealing with tariff whiplash right now, and every single one of them needs silver. Now, let me shift to the second story, because while the tariff chaos was playing out in Washington, something even more dangerous was happening in the Middle East. President Trump gave Iran a deadline, 10 to 15 days to reach a nuclear deal or face consequences. His exact words were, quote, "We may have to take it a step further," end quote. And when asked to clarify what that meant, he pointed to the U.S. strikes on Iranian nuclear facilities last June. I need you to understand the context here. This is not just rhetoric. There are 2 aircraft carriers in the region right now, dozens of fighter jets. The USS Gerald R. Ford, the largest aircraft carrier in the world, just entered the Mediterranean, heading toward the Gulf. This is the biggest American military buildup in the Middle East since the actual strikes last June, and Trump is putting a countdown clock on it. Now, the diplomatic side is interesting, and honestly, this is where I see a possible short-term risk for gold and silver that I want to be transparent about. Iran's foreign minister came out and said a deal is achievable. He said the talks in Geneva produced guiding principles that both sides agreed on. He said Iran would present a written draft proposal to the U.S. within 2 to 3 days. That's a very different tone from 3 months ago when Iran was refusing to even sit at the table. And when I heard that, I thought, okay, maybe this actually gets resolved. But then I looked at the details, and the details tell a completely different story. Remember that Bloomberg headline I mentioned at the top, the one that says, "The U.S. accepted Iran's demand to maintain uranium enrichment." Let me now tell you why I think that headline was published at this exact moment. Because the timing matters more than the content. This story hit the wire on a weekend when markets are closed, when gold is sitting above 5,100 and silver is above 84. If you're short precious metals, or if you want to buy a dip before the next leg up, a headline like this is exactly what you need. Peace rumor hits the tape. Metals pull back on Monday, open. You load up at a discount, the story gets denied or walked back 48 hours later, and the rally continues. I'm not saying Bloomberg fabricated the story. They reported what Hisna published, but the sourcing is an unnamed diplomat quoted by semi-official state media. That's the thinnest possible source for a headline this big, and we've seen this playbook before. Remember how many times during the tariff negotiations there were unnamed source stories from one side designed to move markets? This feels like the same thing. Iran putting out a headline through their own media to signal progress, soften the war premium, and strengthen their negotiating position. The actual substance of the story is that talks are now focused on technical limits. How many centrifuges, what enrichment level, where the facilities are. That's interesting, but that's not a deal. That's a starting point for a conversation that could take months. And while that conversation happens, the 10-day deadline is still ticking. The aircraft carriers are still in the Gulf and the missiles are still on the table. So be very careful with headlines right now. Read the source, read the fine print, and ask yourself who benefits from this story being published at this exact moment. The sticking point is missiles. Iran has signaled it will accept limits on its nuclear program. It might even agree to dilute its highly enriched uranium, but the missile program is a red line. Iran will not negotiate away its ballistic missiles, and Israel is insisting that the missile program must be dismantled completely. The US wants it constrained at minimum. Now, I want to give you my honest read on this because I think the media is oversimplifying it. The missile issue isn't just about missiles, it's about sovereignty. For Iran, giving up its missile program is the equivalent of giving up its ability to defend itself. No country does that voluntarily. And the Iranian government knows that the moment they disarm, they become vulnerable to exactly the kind of strikes that happened last June. So when they say missiles are a red line, I believe them. That's not a negotiating position, that's a survival position. On the other side, Israel will not accept a deal that leaves Iranian missiles intact because those missiles can reach Tel Aviv in under 12 minutes. For Israel, this isn't about trade or diplomacy, it's about whether their population can survive a first strike. So when Israel says the missiles must go, I believe them too. That's the core problem. Both sides have positions they cannot abandon without existential risk. And the US is stuck in the middle, trying to broker a compromise that may not exist. Trump wants a deal because a long, drawn-out military engagement is expensive and politically risky. But he also can't accept a deal that Israel rejects. And Israel will reject anything that doesn't address missiles. So you have three scenarios playing out right now. And each one affects gold and silver differently. Scenario 1, a deal gets done, Iran agrees to nuclear limits, the missile issue gets kicked down the road or some compromise is found, sanctions get eased, the military buildup winds down. In this scenario, the fear premium in gold and silver comes down in the short term. I'd expect a dip, maybe 3 to 5%, not a crash, but a pullback as the war risk disappears. Silver might pull back more than gold because the industrial demand story doesn't change, but the safe haven bid weakens temporarily. But, and this is important, even in the deal scenario, the tariff. Chaos is still there. The debt is still there. The 150-day clock is still ticking. The fiscal situation is still deteriorating. So any dip from an Iran deal would be shallow and temporary in my view. It would be a buying opportunity, not a trend reversal. Scenario 2, talks collapse, no deal. The deadline passes, and Trump orders limited strikes on Iranian military or nuclear targets. In this scenario, gold goes vertical. I'm talking 5,300, 5,500, possibly higher in a matter of days. Silver follows, but with more volatility. Oil spikes. The dollar initially strengthens as a safe haven, but then weakens as the fiscal cost of another military engagement becomes clear. This is the scenario that gold is currently pricing in a small probability of. If it happens, the move is explosive. And I need to be real with you about something. A lot of people in the gold community are almost rooting for this scenario. I get it. Your portfolio goes up. But I don't want anyone to forget that strikes mean people die. Countries get destabilized, supply chains break in ways that take years to fix. I'd rather gold goes to 5,500 because of monetary policy than because of bombs. But the market doesn't care about my feelings. It prices reality. And the reality is that military escalation is massively bullish for precious metals. Scenario 3, and I actually think this is the most likely one, the deadline passes with no deal and no strike. Both sides keep talking. The military buildup stays in place as leverage. Trump extends the deadline or just quietly moves the goalposts. Tensions remain elevated, but nothing explodes. This is the muddle-through scenario, and ironically, it might be the best one for gold and silver over the medium term because it means the uncertainty premium stays permanently embedded in the price. No resolution means no reason to sell your gold. The fear just sits there quietly pushing. Prices higher week after week. I've been watching how markets respond to these situations for a long time, and the pattern is always the same. When there's a clear resolution, either war or peace, Markets reprick quickly, overshoot one direction, then correct. But when there's no resolution, when the situation just stays tense and ambiguous, that's when gold grinds higher steadily. No dramatic spike, no dramatic crash, just a slow, persistent bid that never goes away. And I want you to really sit with this because right now we have both of those dynamics simultaneously. Tariff uncertainty that has no clear end date, and geopolitical tension that has no clear resolution, both at the same time, both feeding the same trade, both pointing in the same direction. I've been covering gold and silver for a while now, and usually you get one catalyst at a time, a tariff announcement, an inflation print, a central bank decision. One thing moves, the market. Then it digests it, then the next thing comes. What's happening right now is different. Multiple catalysts are stacking on top of each other faster than the market can absorb them. Supreme Court ruling Thursday night, new tariff. Friday night, tariff raised to 15% Saturday morning. Iran deadline running in the background the entire time. Gold and silver don't even have time to consolidate before the next headline hits. That kind of environment doesn't produce pullbacks. It produces staircase rallies, up, flat up, flat up. Every new headline is another step. When was the last time you saw the U.S. in a constitutional crisis over trade policy and a military standoff with a nuclear threshold state at the same time? I can't remember one. And gold is above 5,100 right now. Silver is above 84. Those aren't panic prices. Those are prices that say the market sees exactly what I'm describing and is quietly positioning for more. Now let me connect this to the bigger picture because I've been making this point across my last several videos and it keeps getting reinforced by events. The fundamental case for gold and silver is not about any single event. It's not about one Supreme Court ruling or one Iran deadline. It's about the trajectory. Every major government on earth is running deficits. Every central bank is trapped between fighting inflation and avoiding recession. Every geopolitical relationship is getting more adversarial, not less tariffs, sanctions, military buildups, currency wars. The direction of travel is toward more chaos, more uncertainty, and more reasons to own real assets that can't be printed, sanctioned, or ruled illegal by a court. And I want to point something out that nobody's talking about. The Supreme Court ruling didn't just affect tariffs, it affected confidence in the dollar system itself. Think about it from the perspective of a foreign government. You're sitting in Tokyo or Berlin or Brasilia. You've spent the last year restructuring your trade flows around American tariff policy. You've signed deals. You've moved supply chains. You've adjusted prices, and then one court ruling wipes out the entire framework overnight. The next morning, a new framework appears under a different law with a 5-month expiration date. What kind of confidence does that inspire in the stability of the American economic system? What kind of confidence does that inspire in the dollar as a reserve currency? This is why central banks are buying gold, not because of any single event, but because the system itself is becoming less predictable. The rules change overnight. The laws get reinterpreted. The executive and the judiciary are fighting each other in real time over trade policy. No other reserve asset has this kind of political risk attached to it. Gold has no Supreme Court. Gold has no Section 12U. Gold doesn't expire in 150 days. And if you've been watching my videos, you know I've been tracking the Dow-Gold ratio, the same ratio that sat at this exact level in 1973, right before gold went from 180 to 850. Everything that happened this week makes that comparison stronger, not weaker. Now, let me give you my honest take on what I think happens next, because I know some of you are sitting on gains and wondering whether to take profits, and I know some of you are on the sideline wondering if it's too late to get in, and I know some of you just want someone to cut through the noise and tell you what actually matters. So here's what I'm watching. Short term, the next 2 weeks are going to be volatile. The Iran deadline creates a binary event. If a deal happens, expect a dip. If strikes happen, expect a spike. If nothing happens and the situation just drags on, expect a slow grind higher. My personal view is that scenario 3 is most likely no deal, no war, just tension, which means gold stays above 5,000 and silver stays above 80. I'll tell you why I lean towards scenario 3. Trump has already shown his pattern. He sets aggressive deadlines, he threatens consequences, then he extends the timeline and calls it progress. He did it with China on trade. He did it with North Korea on nukes. He's doing it with Iran. Now, the 10-day deadline is leverage, not a launch order. The aircraft carriers are there to make the threat credible, not to start a war. At least that's my read. Could I be wrong? Absolutely. And if I'm wrong, gold goes to 5,500 in a week. So being wrong here actually helps your portfolio if you're holding medium term. The tariff clock is the thing to watch. Those Section 122 tariffs expire in late July. Between now and then, every headline about whether Congress will act creates a new wave of uncertainty. That tariff clock is ticking. And in the background, the refund battle plays out. courts deciding whether importers get their money back, Treasury figuring out where to find $175 billion. All of it is noise that keeps gold bid. Long term, nothing has changed about the macro thesis. In fact, everything I'm seeing is accelerating it. The debt is growing faster. The geopolitical situation is getting more complex. The legal system is constraining the executive branch's ability to manage trade policy in a coherent way. And the world's central banks are still buying gold at record pace. Goldman Sachs just reiterated their target of 5,400 by end of 2026. I think that's conservative. For silver specifically, the story is even more compelling in my view. Silver has been in a supply deficit for 5 consecutive years. The tariff chaos is disrupting global supply chains, which makes physical delivery harder. The industrial demand from solar and electronics is growing every quarter, and the gold-silver ratio is compressing, which tells you that money is flowing into silver faster than gold on a percentage basis. Let me put a number on that. When gold was at 5,000 and silver was at 77 a few weeks ago, the gold-silver ratio was 65. Today, gold is above 5,100 and silver is above 84. The ratio has dropped to about 60. That compression happened in weeks. In my last video, I showed you Tavi Costa's framework that suggests this ratio could go to 25 or 30 over the next several years. We've already moved 5 points in a few weeks. That tells me the market is starting to agree with the thesis. And here's something else I want to point out. The Supreme Court ruling specifically exempted critical minerals from the new Section 122 tariffs. Silver is on the U.S. critical minerals list. That means silver imports are not subject to the 15% tariff. Think about what that means. Every other industrial input just got more expensive. Silver didn't. That gives silver a relative cost advantage in manufacturing, which means more demand for silver relative to substitutes, which means the supply deficit gets worse, not better. If you watched my video on the silver short squeeze, you know that the physical market is already under extreme stress. Refineries backed up, mints closed to new orders, COMEX vaults draining. That was before that ruling. That was before the Iran deadline. Add these two catalysts on top of an already stretched physical market, and you understand why I think silver has more upside than gold from here. I'm not telling you to buy or sell anything. That's your decision and your money. But I'm telling you that the setup right now, in my opinion, is as bullish as anything I've seen for precious metals. Two simultaneous sources of uncertainty, both structural, not temporary, both reinforcing the same trade, in a market that's pricing it in gradually, not in a panic, which tells me the move has room to run. Every time I look at the data, I come back to the same conclusion. The world is getting more uncertain, not less, and the assets that benefit from uncertainty are gold and silver. The court didn't fix the tariff problem. It made it more complicated. Trump didn't back down. He escalated with a different legal tool. Iran didn't surrender. They're negotiating under a 10-day threat with aircraft carriers off their coast. None of this is resolution. All of it is fuel. Two stories, both escalating, both bullish. Gold above 5,100, silver above 84. And the biggest moves, I believe, are still ahead of us. I want to end with something personal. 4 months ago, I started this channel because I saw something building in the precious metals market that mainstream finance wasn't talking about. Every week since then, the thesis has gotten stronger, not weaker, stronger. The debt got bigger, the tariffs got messier, the geopolitics got more dangerous, the physical silver market got tighter, and gold and silver kept going up. Not because of hype, not because of YouTube thumbnails, because the fundamentals are overwhelming. What happened this week isn't a surprise if you've been paying attention. It's confirmation. The Supreme Court ruling, Trump's response, the Iran deadline, the military buildup. These are the kinds of events that happen when a system is under stress. And the system is under stress because the math doesn't work anymore. 36 trillion in debt, 2 trillion more every year. Trade policy getting overturned by courts, military operations being funded on credit. Something has to give. And when it gives, the people holding gold and silver are going to be very glad they did. If you're watching this and you haven't seen my last 2 videos, go watch them. The silver short squeeze video explains what's happening in the physical market right now. The Tavi Costa video explains the long-term math behind why I think silver could go 5 to 10x from here. Together with this video, those 3 form a complete picture of the short-term catalysts, the medium-term dynamics, and the long-term thesis. Drop a comment and tell me which scenario you think plays out. Iran deal strikes or muddle through. And do you think the tariff chaos helps gold more than Iran does? I want to hear from both sides. Share this with someone who holds gold or silver and doesn't know what just happened. Because the last 72 hours changed everything and the next 2 weeks might change it even more. This is the S economy. Stay sharp. Stay silent stacking, and I'll see you.